Hi, everyone, and welcome to another massive 20-minute power play. My name's Sam. I'm the head analyst at Crypto Consulting Institute. We want to do these sessions each month because it provides you with an insight of what we get up to with our premium clients behind the scenes when they're with us in our VIP and our mastermind group. So this episode is just going to be recapping a little bit of what we've covered with the clients, and what we think is really, really important over the last month, and especially the last few weeks. Also go through some of the charts, see where we're at right now to give you a bit of insight where we might be going. So let's crack in. We don't have much time. First of all, I want to move into the fear and greed index. Excuse me, my computer's just running a bit slow. Okay, perfect. Fear and greed index, which you can see on the screen right now. We've been in a bit of a malaise for a while, and we're hovering around the midpoint, which is actually a really good sign because we have been slowly moving higher these last few months after a pretty protracted drawdown in the market, and after a break of a 100-day downtrend as well. So things are slowly moving higher, and it's good we're not seeing, you know, the next extreme going up to 90s, 80s, 100. It just shows me that there's not a lot of FOMO in this market anymore, which means there's not a lot of retail participants, especially in Bitcoin in this market at the moment. They are more highly concentrated around the altcoins, but even that, it seems like a lot of capital has fled the market, and now we're seeing the slow build back into mainstream consciousness and where we are previously with investors getting excited and coming into this space. So just looking at the fear and greed index again, we're at 48 now, yesterday 53, last week 55, last month 23. So we are coming from the lower end of the spectrum in that extreme. We have been down there for so long. The only way is up in the sentiment. So you can overlay that on the technical picture as well, and often it is really helpful to play those extremes. When we're down in these heavy concentration bands at the bottom of the sentiment chart, you can see down here, down here, down here, they will absolutely correlate with where the market is at. So in these heavy concentration bands, we'll see a low trough in price. That's pretty much when everyone offloads their bags. If they're in a short-term investment position or they aren't educated investors, they will offload their positions, fearing what's happening in the market, thinking it's going to go even lower when it doesn't. That's generally when the bottoms start to form. And I think we have found a bottom, especially recently in this market, based on my sense is at least that Bitcoin has been hit with headline after headline, negative headlines, of course, you know, war in Ukraine, the Fed tightening policy. We've also had COVID. A lot of this stuff is just tied into this big melting pot where the market takes it, absorbs it, and eventually the sellers exhaust themselves. And I think we are seeing that. And when sellers exhaust themselves, when we're just getting constantly hit with headline after headline after headline, and it no longer has an impact on Bitcoin, and we actually see price start to move up, that is a tremendously good sign that a bottom has been found. And we are seeing that accumulation zone slowly grinding out until we move into higher prices. So just looking at a zoomed out picture, I love the weekly chart because there's so much data and takes a lot of that emotion and the noise out of that more granular view on the daily and the 4 hour. And if you're going lower, I mean, that's really the realm of day traders that stay away from it. But if we look at the weekly chart, just have a look at the formation that we're seeing here. So after the last, say, year and a half, we have just been bouncing within this trading range of 64,000, I think we got up to 69,000, that all-time high, and down about 28,000. So you see very clearly defined between these two lines, the levels that we're looking at. Now, what is happening over time, you can pretty much see it, and we do cover it each session if you've been watching these power plays. The bottom was around here at about 28,000. Then we had another run to an all-time high and a bit of FOMO towards the futures ETF that got approved in the United States. This was on actually low volume, so eventually it would peter out, and we did have the big drawdown after that, and that found another bottom at 32,000. Now, what's the difference between these two? You can see by this trend line that the low is higher here than it was previously. So that is a really good sign that the market is finding a floor higher. Buyers are stepping in at these levels, and they're confident that that is a fair value for Bitcoin, and we're moving higher. And you can see here, this level was strongly defended by bulls, constantly moving higher all the way up. And a key band of resistance that we just had to break through to be more confident that we're going to see an uptrend or a new bull phase in this market was this middle bracket here. This is almost like the mean of this entire trading range, this average right in the middle of this box. As you can see, it provided tremendous resistance as we were trying to punt back into it. You can see these wicks being sold off into really heavily. And then we finally had the break here. The downtrend was broken around about this area as well. So This for me is a tremendous sign that the market is trying to recover and we're looking to move higher. You can see how bold this candle was. This huge green candle ripped right through this resistance zone. We kept tagging, finally we broke through resistance. And for me as well, the 21 EMA on the weekly is a tremendous source of information because when we're above it, we're in an uptrending bull market. Now, all bull markets or times when we've seen the market in a peak phase, we have always been above it. So you can see this blue line, look where the market is, look where the candles are. And if we look back to 2017, so the big ICO craze and that last massive run in the market, you can see what the 21 did during this price phase. It was move up, kiss, bounce, move up, kiss, bounce, 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 move higher. So it adheres to this quite well. And on the weekly, because it is such a high time frame, with a lot more data, it is very useful to see. Now, again, broader picture, you see where we're heading, the higher low bounces, we're moving beautifully into this ascending triangle or a larger wedge. You can see it just grinding into this area. And the arrow I've just pointed there just to help the visualization. It looks like we're heading for the third point in this ascending triangle for a breakout, hopefully. But if it doesn't, that's okay. We could retest this area here, and I fully expect to find heavy resistance around this higher range bound and potentially come back down to retest your 50,000 somewhere in this area to form out the triangle, but it doesn't have to play out that way. This just looks to me, the directional bias is up based on what's happening in the macro and based on what's happening in the technical. So this to me looks like a healthy bit of a pullback into this resistance zone to retest this big band, this hugely consequential band. So you can see this pullback, we've had that huge bounce up off the low, so that 20% move. And now we've had a pullback to the 21 weekly EMA, so 7% down. So that is fine. This all looks quite healthy, but there can always be macro curveballs, which we can talk about in a moment. They come out of nowhere. So something like that would be an unforeseen massive interest rate rise out of nowhere in the United States. So let's say 1.5%, 3%, if they want to get on top of inflation really, really quickly and go incredibly extreme, they could really throw the spanner in the works of the equities market, and then crypto will feel that as well. We'd also see an escalation in Europe. So we could see chemical weapons, nuclear weapons, war with NATO and Russia going to war. So if that happens, risk markets, that includes crypto, that includes equities, will get smoked in the short term. But right now, what's happening in Ukraine, the conflict has largely been priced in by markets. We've seen a fairly significant relief from those lows. So it's very much a sell the noise and buy the cannons, as it were. So it's the anticipation of an event that it's coming, sell off into it. And as soon as the markets digest the information, you're finding almost a low. And that's what we've seen in previous wars. And I know it's a bit morbid to think like that, but as an investor, you do have to think like that because there's tremendous opportunities to be made in any environment. If we look more at the granular here of Bitcoin, I just want to show you what we've been seeing from, let's say, this bottom area that we've been grinding out. So just what we looked on the weekly, this is a more granular vision. This is on the daily. So every candle here represents a daily movement of Bitcoin. So we pretty conclusively broke out of this this wedge. Let's just call it a wedge. So this was the ceiling of the wedge. This was the bottom of the wedge. You can see it's just growing. So higher, low. And up here, this was a clearly defined resistance area till we broke through here. And now we've come back down twice. And this is rather telling. We've come back down twice, bounced into the ceiling of this wedge, and it's been bought up both times. Now, right now, we really have to see how this candle closes on the daily. We've got 21 hours left on it. But it's bounced heavily off the 21 EMA on the daily, which is a good sign, but it really doesn't mean anything until this candle closes. So if we can close above this level, happy days, but we could also see further downside back into these levels. We are supported over here by rather large volume, so that is good as well. If you break down through these heavy volume areas, then it can drop quite quickly, but right now it seems to be being held up by this area here. I know a lot of bids are being stacked at around 42 to 44,000. So just see how things go. But overall, a retest of previous resistance now turn support is bullish. So don't let anyone tell you otherwise. This breakout from resistance, we've got caught on the 200 moving average, this red line here. Now we've come back down to test the ceiling of this wedge. That's what markets do before they move higher. It's always a staircase as we go up and an elevated down. So just keep that in mind. All right, looking at the total cryptocurrency market cap, I just wanted to show you this because it just prints an image of what's happening of the entire ecosystem. Is there new capital entering? Is it just capital circulating the ecosystem, being unhealthily moved between, one crypto that's pumping, selling off, and moving to the next one, catching the next pump? So this is showing me that we are grinding high overall. So this channel is uptrending. We can see that we made the high there at about $3 trillion in the crypto market. And then we had that big sell-off with Bitcoin, so it basically halved. And now we're moving back up. So capital, new capital or old capital is starting to flow back into the markets. We know when we got into these larger areas, see these peak states in the market, and we started to see some downside. A lot of very large investors began to move their holdings into stable coins, so they hedge, but they kept the stable coins on exchanges. We can see that. So there is capital there ready to go. So this 1.5 trillion that's still outstanding now, or 1 trillion that's left just sitting on the sidelines, that's ready to move back in at a moment's notice. And there just needs to be more clarity around the macro in terms of what the Federal Reserve is doing. And I'll get to that in a minute, because there's still this uncertainty hanging around May, June, July about these interest rate rises. But again, the longer that markets have to be informed about it, the better the chances they are of pricing it in. But right now, inflation is running rampant. It's scaring a lot of central banks because they've held their cash rates around zero or negative for so long, and they have very little ammunition to fight it. They raise rates, causes a lot of issues for a lot of people, and the market's just become unstable, and it is unsustainable to raise rates in this environment. So let's just get into Ethereum, because I wanted to show you this. Now, Ethereum actually looked more bullish than Bitcoin. Now, it broke from this very similar to Bitcoin, this downtrend, see this green line here, broke out of the downtrend here. So just to paint a picture there, it bounced, could never get above this line. And that's a very clear downtrend. But here we go, we broke that trend here. We're moving up ever since. We got above the 200 moving average what's today, Wednesday, earlier this week. We got above it. It started to look rather bullish, but it needed to close above it, and it didn't. It sold right through it and down. So we're now back to this support, testing it. But so far, Ethereum does look better than Bitcoin because it is more advanced towards that 200 moving average. So look, Ethereum looks good. We know the fundamental value of Ethereum, and it is continuing to grow. All right, here's just a quick snapshot of the Federal Reserve. This is something we cover with our clients almost daily. It has such a massive impact on crypto because it has such a massive impact on traditional finance, traditional markets. What the US Fed is doing matters pretty much for the whole Western financial system, so you just have to pay attention to it. The Fed has been very, very slow at raising interest rates, and they've done very, very little. I think they've risen at about 0.75% the cash rate over the last few months. Now, for a lot of people, that might be gibberish to you, but that increases the pressure on risk markets. They want to cool down the energy in markets because there's a lot of liquidity flowing out. They want to cool down demand, hopefully trying to reduce that inflation out there in real estate, in commodities, and other areas. But it's very hard to see how raising rates by another 1%, 2%, 3% has any impact on 7.9% compounding CPI inflation. So that's very interesting. People still need petrol to put in their cars. They still need to do their jobs. They still need food. That won't change the supply chain issues if they start raising interest rates. People are still going to need to buy it, but it just means a lot of things are going to get more expensive. But anyway, moving on from that, the Fed has signaled as well that they are looking to sell off their balance sheet, which is probably the most concerning headline we have seen. Interest rates rises are a concern, but markets are very good, again, at pricing them in. And there is the thought that they can't keep it up forever. So there is that thinking that if you're just playing the long game, it is all fine. But the Federal Reserve owns trillions of dollars of bonds and assets on their balance sheet. They are the biggest buyer of bonds on the market. If they begin to, halt that, which they have via QE to a degree, if they begin to offload all that they have, they are going to be a net seller on the market, and it's going to put huge pressure across every risk asset class, and it pretty much signals a lot of instability in the market. So we have to pay super attention to this. This is all talk just now, but it does show you that they are very serious about talking about being serious about inflation in May and June. So again, we have to keep an eye on this, pay attention, because one headline, one we've liked this morning when we had this come out, equity sold off, crypto sold off. So you can see the correlation there. Again, something we cover with our clients and just how to interpret this, because there can be a lot of noise. You can get stuck in the weeds a little bit. but you do need to know what these headlines mean. So just moving forward. All right, I wanted to show you this because it was a bit of amazing news. So I'm from Adelaide, and OTR is one of the biggest retailers in the country. So this news was met with a large degree of skepticism, which is no surprise. If you're watching this, probably come from traditional market background, or you're just looking to get into crypto for the first time. You're probably skeptical as well. You've heard all the stories out there about crypto, and you know, a lot of people come from that angle of the negative side when they're not informed, and then they start to learn about it and understand, okay, well, this makes a lot of sense. But OTR doing this, again, one of the largest retailers in the country, are going to start accepting Bitcoin for fuel. I think this is very symbolic. It's not not a lot of people are going to be buying fuel with Bitcoin. It's just a bit silly when Bitcoin is more used as a saving mechanism over time, you know, a wealth creator over time, and a wealth builder. They are going to allow other cryptocurrencies through crypto.com as well. So this will be a very easy pay with a QR code type system. Again, it's more symbolic, and I think it just shows you the broader macro implication, the higher level stuff. The Shahinza own OTR, that they're based in Dubai. Dubai is one of the most progressive nations towards crypto that you will see on earth. I suspect they own some as well. They own some Bitcoin, they own all that. They want to get in front of this. They know it's the future. They just want to provide that functionality to people. And look, eventually this will become a much bigger thing in terms of transactions. But my theory is that they may want to just slowly build a treasury reserve of Bitcoin and crypto, because what else would they do? There must be demand, but it won't be very large. So, you know, it can't be that they want to bring it in because so many people are demanding to pay in crypto. I just don't think it's the case. I think they want to, as a symbol, they want to do it because they have a lot of sway and a lot of power, and they want to show that this is reaching mass adoption, and in the future this is a direction we want to go, and slowly we will accumulate Bitcoin that people want to spend. Okay, moving on to probably the biggest piece of news this month. I'd say it happened this week, but it's probably the biggest news this month. So the United Kingdom has previously been very skeptical about crypto, and it's been making a lot of negative noises about the space, but they came out this week, obviously saying one thing and doing another, because the finance minister of the UK, they want to aim to become the global crypto hub. And among the initial steps will be the legislation to recognise stablecoins as legitimate vehicles for payment. Stablecoins rub a lot of people the wrong way, but if governments are starting to recognise them, legalise them, it's a really big step for crypto, because stablecoins are very much the lifeblood of cryptocurrency trading and movement of assets right now. It also helps prop up the US dollar. It's a very interesting proposition, but this is fantastic from the UK. They're looking at how to change their tax laws. So we know crypto is subject to capital gains tax as well. So countries will have to get pretty savvy here about creating thresholds where you can, like the OTR situation, you can only pay, say, for your fuel if it's a personal asset without getting taxed. And so what you'd have to do is buy the Bitcoin, say, within 2 weeks, and then spend that Bitcoin at the Bowser to avoid the capital gains tax. But if you're an investor and you have, say, Bitcoin in your wallet, you've held it for longer than 2 weeks, and you went to go pay fuel, you would be subject to capital gains tax on that transaction. So governments will want to make this easier if they want to embrace this technology. So creating a threshold, let's say up to $600. There's a bill in the United States at the moment that's looking to do that. So if you spend crypto up to $600, it's completely exempt from capital gains tax, which is fantastic. So they're looking at all that. Crypto regime, it's basically a framework on what they want to do. Again, a lot of this is all talk. There's not a lot of substance just yet, but the biggest, I guess, substantive headline that they did was they're minting an NFT for Her Majesty's Treasury, which is interesting as well. So clearly they think NFTs are a big thing for the future. A lot of governments do, but they're all building their own strategies. And this is a very interesting game theory at a high level, macro high level, when the EU the other day came out and put sanctions on unhosted wallets. So I won't get into the weeds with that, but let's just say it was a very negative, almost targeted ban on Bitcoin wallets and crypto wallets outside of the current banking system. So they're very hard on that. They're targeting that. They're also very hard on the environmental side. Now, the UK and the EU have obviously fallen out a bit of favour with each other, and literally 2 days or 3 days after the EU did this, the UK has come out with this, and they're doing the diametrically opposed. They're doing this game theory. They're seeing the competitiveness between the two. They're like, no, you don't like it, we'll embrace it, that sort of thing. And that's happening all around the world if you're opening your eyes to it. All right, and lastly, we have a really big event coming in the next few days. So in Miami right now, Bitcoin 2022, it's the largest Bitcoin conference in the world, pretty much a crypto conference, but it's solely focused on Bitcoin. Anyone who's who in the industry is there. They've got some massive speakers, Michael Saylor, Anthony Scaramucci. They've had political figures. I think they had Ted Cruz last year. Yeah, a lot of the Republicans like Bitcoin, and they go there as well. There's a few Democrats that I think may be in attendance as well. But anyway, it's a really, really massive event. But what is so significant about this is each year it is getting bigger and bigger and bigger. And last year it was announced by Jack Mullers, who owns Strike. He helped El Salvador create a legal tender and bring Bitcoin onto the Lightning Network. He made that announcement last year at Bitcoin 2022, and there's a huge amount of speculation that there is going to be another ginormous announcement. So whether it's a sovereign nation that's adopting Bitcoin again, or something else. And Jack Mullers did tease something. He was wearing an Apple hat in a picture the other day, looking forward to the conference and whatnot. So read into that what you will. Is there a partnership, or is Apple Pay looking to incorporate Bitcoin in some form or another? We know they've updated a lot of their emojis to include Bitcoin through their iOS software. So there could be something in the works there. I do know from listening to a few podcasts, Jack Mullers has been in close contact with Jeff Bezos, with Apple and a few other major companies, because they are all interested in providing this service for customers. All right, guys, I hope you've enjoyed this 20-minute power play. We'll catch you again next month. If you are interested in further insights, we release a sensational report every month. I do say so myself. If you want to sign up, it's called the cryptocurrency newsletter that we release. I'll put the link in the bio down below. Yeah, if you want more insight, I would suggest getting on that or join our free group, and you can become a client of ours as well. So guys, have a wonderful day. Ta, bye.